The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We're going to start out the day like we usually do, taking a look across the pond over at the DAX and also the FTSE. As you can see, they made some type of a top. At least for a correction. Might only last 2 hours, but that's what it looks like. We had a pretty good break in the S&P. We went from 41.86 down to 41.14. That was 72 handles, and we've come back really strong here, trading at around 41.55. Now, the 61% retracement back on that, folks, that's 42 points down, so we should get a rally of at least 260. So if you add 260 onto the 14, it should be right around 51 is where the rally. We're already above that, so that tells you it's a little stronger. But we were down 3 days, and now we're coming back. I started real early, right after the opening this morning. Buying came in, and away it went. Now, we have a question several questions that I wanted to cover. Oh, by the way, folks, tomorrow we've got some really great guests coming up next week. But tomorrow we're going to have Tim Bost, and then we're also going to have Norm Winsky on Friday. On Tuesday, we're going to have David Paul. On Wednesday, we have Stan Harley. On Thursday, we're going to have Jeff Huge. And then on Friday, we're going to have, well, that's Fleming's birthday. We'll have to have Fleming on. Anyway, we've got 3 guests next week, and plus Joe DiNapoli. Joe DiNapoli will be coming in too. So we got a nice group coming in, which will be fun. Now, we've had a question about Mr. Appel. We've been watching Apple for quite some time, and we'll get the chart up here so we can chat about it. And as soon as I find the chart, and here it is, we're going to take a look at this. This is what we've been watching all along. You'll notice here, in the Apple, we got up to the 61% retracement, was 134.04. The high that it got above that over a 5-day period was 135.36. So that's very small. Then yesterday we broke down to 131 and a half, and now what we're trading at is around 133. So it's just in this really tight zone here. And I know they've got advertising stuff come out because they're a great marketing company. That'll probably move the stock either one way or the other. Now, that's the whole key, is which is it going to be, one way or the other. That we'll find out when we see more time. But right now, it's still in a sell zone, coming down to that ABCD, that big ABCD up there at the 134.04. The question is, how do you know whether this is a start of something or the end of something? And the answer to that is you really don't know. All you can do is rely on the numbers that you're looking at. And the one thing I would say to answer this question, if you get above 136, it's definitely going to go higher. And, if we get below 130, it's probably going to go lower. That's the only way that I can do it. The patterns are good for predicting within limits, but the one thing they are good at is telling you when you're wrong. And if you get above those numbers, you just don't want to stand in front of it. It's just not worth the effort. So kind of keep that in mind as you're looking at it. It's all about risk control. I know the patterns, you think that they're perfect all the time, but they're not. Just take a look here. Back in February, we had the beautiful Gartley up there at the 139 level, and the price objective was supposed to be 124. Look, it just kept dropped like a rock all the way down to 116, and on a 60-minute chart, that's a lot of money. So that's what you got to do. You got to measure the risks that you're taking when you put the patterns on. They do have a really good idea of matching up with the prices, but what happens is, if you think of it, the only thing that you can control is the amount of money that you have at risk, and that's the whole key to what we're watching here. That's very important. Now, we have something rather historic happening here in the lumber. I wanted to bring this to your attention because we were talking about this just the other day, and I wanted to. We talked about it a tiny bit yesterday. I want to go through with it today. But those arrows that were up there, those match those little red lines, and we're looking for a big ABCD up in there. and it was around the 113.70. And believe it or not, folks, believe it or not, I get an email last night thanking me for the trade in lumber. Folks, I have not traded lumber in 50 years. And I said, this is not something that I trade. I would never trade it. And yet he said he sold it at 13.70, and it went limit up to limit down, which is the first time it's done that in so many days. Somebody even highlighted it on Twitter and was kind enough to send it to me because I was talking about it on the show. And frankly, I don't. You can see it went from 13.70 all the way down to 12.90. It's a little bit lower today, but look, that's the first major down day it's had in 2 months. So that's flat out lucky. I don't know what that means. When I give a recommendation on these, you're responsible for the trades. I'm just giving you the patterns. That's all I'm trying to do, and that's all I can do, and that's all I will do. All right, let's take a quick look at one of the markets that we were watching earlier in the week, and that was the Canadian dollar. We've had a bearish move in the Canadian dollar. We've made a beautiful three drive to a pattern, as you can see, and then we rallied up today to the 78% retracement. Those rallies, the rally up to point A, the rally to point C, and the rally to the point we had today, all were equal, folks. They were all equal, and now the market reversed. We've had a big outside day to the downside. That was basically due to the Canadian government saying we're not going to do anything with interest rates, but we're going to stop buying bonds. So that's what we're keeping an eye on here as we're looking at this. Now, there's another chart that someone was kind enough to send us, and this is from one of the folks that follows our good friend. Hold on one second, from Timer Digest. No, not Timer Digest. Daily Graphs, Bill O'Neill. Let's get this up so we can see it. I happen to know Bill personally, and Art, who helped run the company. My daughter's first date was with his son, and by golly, they're still going together to this day. They didn't get married, but they are living together. But in separate rooms, I'm sure. At least that's what my daughter told me. Okay, here is a cup and handle pattern here I don't use these patterns, but this is really a beautiful pattern when you look at it this way. He's drawn it perfectly, and we had this pull back here at 17.23. I'm trying to buy at 17.17, and I'm sitting here with my billfold empty, and it hit 17.99. And so, by golly, this thing looks like it's going to go. But what they're focusing on here is the fact that the prices are so high and the stochastic is so low. That's a very, very unusual. I don't like stochastics. Well, I don't like any oscillators. But the fact this is a bullish pattern, folks. Gold and silver look like they really, really want to go, higher. So ROTF. Oh, rolling on the floor laughing. Oh, I'm not very good with these things. Okay, hold on just a second here. He got me by surprise, boys and girls. Hold on. Here's where we are. Let me just show you where we are here in the gold. I'm going to buy the first $17 pullback. I guess that's what I'm going to have to. I'm really frustrating, take so much money out of it and then, leave some on the table like we've done. But, that's the name of the game. Hey, we'll take a little break here. 877-927-6648.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, I have a good Bill O'Neill story. It was my daughter Jill's first date. She was 14 years old, and they were going to go to a dance, and the kids had chipped in, and they'd rented a limo. There were 8 of them, and so Mike comes to the door, and I had bought the previous weekend, I had bought a Browning shotgun. I just bought it as a speculation. I never kept it very long, but it was a beautiful gun, and I was just polishing it up in the den, and Mike came to the door, and I just happened to have 2 shotgun shells in my hand because I never keep guns loaded in the house. And so he knocks on the door, and I open the door with the shotgun, and I swear to God, he turns white as a sheet, and he's stuttering. He couldn't even spell my name. Of course, we knew each other, and I just started to laugh. I said, it's no big deal. And my daughter comes out, and oh, my God, she got mad at me. And I said, well, Jill, I'm just worried at you. And she whispers to me, Dad, get out of your covered wagon. She says, this is the 20th century. Oh, the things you learn about your kids when they're older, you don't want to know, so don't ask. Okay, let's take a look at a couple others that we're looking at, folks. I posted the chart here of the natural gas that we looked at yesterday. That starts to work pretty good, and so you want to keep an eye on that. Certainly don't want to let it go to a loss if you actually did that trade. But we've got another one that's really on the watch list here that I'm going to be sending out for the 24/7 people. I won't be posting it in the room here because I shouldn't be posting trades that people pay for, and I certainly don't want to do that. I'll cover the stock market stuff here in just a minute. But remember, we had a special request from our good friends over at Goldman Sachs to take a look at this pattern that's supposed to be coming up. And you can see that it's a downtrend. I drew that green line in because I wanted to show you that's a 1-3-5 pattern. But so many people are watching this now. We've had one of them, one of our really good Forex traders from over in France, has kind enough to send us this Euro chart. You can see there's the 1-3-5 pattern. It's be today or tomorrow. I'm working on the price right now, what to look at it for, but we're up 11 to 12 days now in the Euro, so it's due for a very good correction here in this Euro. So we want to be watching it extremely closely. If you'll notice the chart that I posted in the newsletter this past week, we'll get this up here so we can see it. We were looking at that area around that 120.50 level, and of course, it looks like we might get just close to 121. We're trading around 120.60 now, I believe. So we're getting close to that number. We'll be watching it as near as we can tell. Folks, these patterns that we deal with, they're good for two things. They have some predictability, and remember, it's only in percentage. It's only probability. And the other thing that you got to remember is the really thing that they're good for is risk control, because when the pattern fails, that's where the real problems can lie. And you don't want to get into that. So make sure that when you're wrong, you get out of the way, because if you end up not doing that, you're not going to be very much fun. Okay, Jimmy is telling me that the S&P is approaching the 78% correction. Well, let's do this together, boys and girls. We had a high of 41.86. We had a low of 41.14. That number is, that's how many handles is that? That is 70. That's 73 handles. So the 78% retracement on 73 will be right at 50 points, it looks like. That's what it looks like, 39, 49. I can hardly see it. I got it on my board above here. Just a second here, and I'll tell you what it is. That is, it's 50, wow, 50, let me see, 58 points? No, wait, that's not right, 46 points. Is that, wait a minute. You said it was 70, we dropped 74 points, so 74, 58 back will be the 78% level, so 58 back will take you to 60-something, Jimmy. That's what it should be. Do the math here. You got 41.86 minus 41.14, that is 40. That's 43 points. So 43 back on a 78% will be 34 points. And that's right near the old Fibonacci number of 34. So 34 added on to 14, put it to be around 57. We should be right around 41.57 for the S&P. Someone would be kind enough to tell me where it is right now, because when I'm on the line here, I can't get the live prices. Otherwise, it messes up my data stream, and I can't do that. Can someone tell me the last and the high on that June S&P to see if Jimmy is going to be correct? Because at that point, the high is, it's 41.52, and what has been the high? So we're within 2 points of it. 41.54 would have been the number, so that would be the 78% level. You can see this, folks. We've been watching this. Here's where we thought we were going to go to. If you remember, we looked at this. We thought we would be able to get down to the 41 level, but we only got to 41.14. We matched that low. We had 41.10. And then last night we had 41.14. We made a higher low, and from there we've had the good rally. So the good rally would take you up. That would be, well, wait a minute. That would be 41.52 would be a 61% retracement, I believe. I'm just looking at this. 41.85 to 41.14. That's 70. 70 back is going to take you to, hold it just a minute. I've got a table, but my eyes are so darn bad I can't always tell it. See, 70 would be, that'd be 53. So it'd be, this would be right up here is where it should be, right around 41.56 is what I'm looking at. I hope that I have a card, a big trading card that I carried with me when I was on the floor of the exchange. And what I did was I would pull that card out, and I could quickly look up and see that if I had 81 ticks in the T-bills, that 61% retracement was going to be 50 points. And if I had a 20-point move in, say, gold, all I had to do was to see that 786 was 16 and the 1.27 was 25. I kept that little plastic card. So many people would come up and say, "What is that card that you're always using?" And many years later, they don't do it anymore because there's not any floor traders. But the last time I was on the floor, which was 12 years ago, I was on an elevator, and these young fellows that are runners, they sell these little tip sheets of where the support and resistance is. And this young guy was really after talking to Paul. He was a huge trader in T-bills, and he was telling him, "Look, you've got to look at this sheet, and these fib numbers really work and everything." And Paul laughed at him, and he says, "Where did you get these numbers?" He said, "Oh, they come out of a book." And the guy said, "What was the name of the book?" It happened to be, one of my first favorite books, Pattern Recognition with Fibonacci Numbers, and the kid didn't even believe it was me. I didn't even believe it was me, and I was me. Okay, we got a break coming up, 877-927-6648, and we'll be right back. And I'm going to put that chart up for the S&P to make sure we get it right. There you go, Marshall. Bada bing, bada boom, Marshall. You get the prize, my friend. In fact, you get the big prize today at 3 o'clock.
Hi folks, this is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, during the break, I posted the chart of the E-mini S&P using a 15-minute time frame so we can see the highs from Sunday and where we were yesterday, and then also today making the little bit higher bottom. You notice this morning we came in and we had two higher bottoms in there. We couldn't break down to that area we were looking at, which would have been a great buy zone right around that 41.04 level, but we only got as low as 41.10. Now we've had the pretty good rally, and as you can see, it's set up. It's still in a downtrend. You can see the sloping line there. That's basically a 135 pattern and should not get above 41.60 if this is correct. And if it gets above 41.60, then it's just a heartbeat away from challenging highs, and that's also a possibility. So remember, when these patterns fail, they're telling you something, and you want to pay as close attention to it as you possibly can. That's the main thing. So those are just a couple of things that we should discuss today. Also, we had the bonds yesterday, took out yesterday's high at 158.10. We got up to 158.11 when we dropped about a half a handle, and now we're trading at around 158.02. The bonds are actually holding up relatively well, given up all the news that they're seeing coming from Canada and some other places. So it's still a bear market, but it's making higher bottoms in here, lower tops, of course. That means we're just in a trading range, but there should be very strong resistance in the Treasury bonds in that area of around 159.05 that we hit once before, because we're well into 5 weeks of a rally after that 3 drive to a bottom pattern at 153.05. And then we'll see what's going on. I'll cover the gold here in just a minute. I have to get my courage up to do that one. We want to take a quick look here. Dave in Michigan, remember, was in this stock called Zoom. He bought it on the, I believe it was back on April the 12th, I believe, and the market had a nice run up to 346, and we put that black line in there. If you remember, we mentioned to him, don't let it go below that 328 level, which was your place where you bought it. And so if he had done that, he would have been out with a break-even trade. Hadn't he done that, he would have been looking at a market that went all the way down to 312. It's at 321 this morning. But you still had a nice profit, the ABCD, at 786 retracement, spot on. Also a 1.27 expansion of the move from April 1st to April 5th. So, that's unless you're playing for something really big, folks, you got to be prepared, to take a profit. But I think the one particular pattern on here that I didn't draw in, if you'll follow with me, look at the high that was made back on March the 11th and the ABCD pattern that it formed coming into the 30th of March. That is a perfect ABCD pattern, right on the money. And if you wanted to defy human nature, if you would count the bars from the 11th all the way down into the 18th, that's 7 bars down, and you take 19th to the 30th. Look at that, folks. It's just spot on, price and time equal. And so there's one of those situations where the patterns, work really well. So that's what we're watching here. Someone's asked me to show a pattern that is not working really well, and I would have to say, from my perspective, it would have to be this one right here in the, let's get this up here 1 second here. This is a daily chart on the gold, because I really thought the gold was going to hold 1760 on this run, and it backed off to 1722. I'm trying to buy it at 1717, couldn't get it bought, and of course today we hit 1799, which means we're heading up to 1805 most probably. And but that's one that it's I shouldn't complain, folks, because it was incredibly good to us. We took a lot of money out of that gold market on the long side and the short side. But I've missed this last leg up. I mean, we bought it right, and we took $70 out of it. But folks, we left 70 on the table, and I don't like to do that. But that's neither here nor there. Anyway, we're going to keep watching it, because eventually we're going to be in that market again, and see if we can get it on the right side of the market, so we'll be able to see, it's how it's actually acting. Now we need to talk about. Yesterday, we were spending some time talking about Netflix, and the reason why we were talking about Netflix, I'll get this up here for 1 second here, and I want to show you, because we were talking about the FANG stocks. Let's get this up here, and then we'll be able to see Netflix in here. 1 second. And here it is. And we were saying that Netflix was going to have a lot of trouble in this area of the very much. I don't know how much it's down. I don't think my prices are updating today. Yeah, they are. I'm showing Netflix at 546, that's not down very much. I mean, from 560 to 546.5 is not down very much. So it's held up relatively well given, oh, no. Now it's updated. Shut the front door, Larry. Raise the rent. Hold on. Here it is. Netflix is now down to 512. They just updated, as you can see here. And so that was telling you that there was some strong resistance up there at that 61% retracement. And like we say, sometimes the markets work and sometimes they don't, but that's what we're looking at here. Hold on one second, folks. I wanted to share with you one other in the FANG group that is quite interesting, and that is the Google, because it just keeps on rocking. I mean, I'm amazed at it, and I know where the top, and I haven't traded it since Hector was a pup. Let's get this up here a little bit. Here's the 510 now on the Netflix. Okay, you see it broke out of that channel, that little box that I had. I thought it was going to break out to the downside, but with that day before it broke out in the box, your guess would most probably be it's going to break out to the upside. But when you see those, they are so darn rare that it's pretty hard to pretty hard to fade it. So those are just a few of the ones that we're looking at. Just let me get this thing set up. I've got to get back to my main sheet here so we can see where we are in some of these markets. I want to sort of keep it update here. We are trading at, okay, there we go. We got the S&P still at 4150. It should have some resistance, folks, between 4151 and 4156. It should have some pretty strong resistance at that level. On a longer term basis, I don't really know, but it is telling us that's what it should be doing. And again, I'm saying it's what it should be doing. Whether it is doing or not, I don't know. We've got the gold trading at 1792. We had a high of 1798.5 today, and I'm still waiting for a place to buy it. The biggest correction we've had in gold over the last few days has been $11, and I've been looking for a $17 correction. And so I've been sitting here with my pocket bowl empty, but hasn't emptied out with any losses, but I haven't been able to buy it. So I'm still waiting for a buy in it. Silver's still lagging the market a little bit, and that's another one that we're watching, very, very closely. So we have a very strong weather front out there. We talked about it on Monday, a little bit yesterday, and of course it's getting a little worse. We got soybean oil into new high ground, and we've got soybeans are close to being in new high ground. Wheat's had a nice big run too, and corn is just absolutely on fire. We got a big problem here if the crops get worse, folks. 877-927-6648.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Okay, we're back, folks, and I believe we have a caller from Kansas. Robert, are you there?
I'm here, Larry. I was wanting to talk to
what can I do for you
about XBI. It's the biotech sector of the S&P 500.
Okay. I posted that in. I believe you called last week about that, and it was pretty much right around that 126, 127 level?
Yeah. So what is this communicating to you? So if you look at it like in March the 5th, it came down and touched 128, and go into the end of March, and it's touched one day, it touched 126, and then it keeps hitting that floor of 126, 127, and then yesterday it came down and touched 128. But then at the top of it, it looks like it's kind of forming a wedge. What does that mean to you, or what do you take away from that? Or
those prices are if you're just looking at the chart that I posted here in the den, you can see that 126 has hit about 5 times, and that happens to be right at a 61% retracement. So it tells me a great deal of support there. Now, if that support disappears, if we get down below 124, then all those people that bought at 126 are not going to be very happy. And that should make it go lower. But right now, it looks pretty bullish. I mean, it's not moving up much given the rest of the market. The rest of the market's had a huge rally, and this one hasn't done very much. So that's enough to be cautious about. But the strong support at 125, and as long as it stays above there, it's got a chance to go higher. That's the way I see it.
On a short-term basis, what do you think if you look at it on a weekly chart?
A weekly chart doesn't look any different. I mean, it actually doesn't, because it's it's had a big move. But I can't trade off of weekly. This daily chart is so clear to me that a weekly chart doesn't make this action right here. And we've come down for 3 months now, and we've held right at that 125, 126. That tells me there's strong support there. Anything below 125 is not good, and it most probably will go lower. But 125 is put a red marker on that one, because it could really go much different.
Okay. All right. Well, I appreciate you taking time to look at that for me.
Okay, no problem. Okay, folks, I'm going to take thanks, Robert, for calling in. I wanted to take a second here to talk just a little bit about the December corn. We're in the midst of this weather market, and as you notice, I marked there the key time. They had that big report that came out. We were just missed the 61% retracement. We were trying to buy that at 448, and we only got down to 450. Then it exploded to the upside, and we're up to 539 today. And it was about a week ago that we were looking at possibly going short at 512, and that's when we start getting influences of possible weather problems. And I said, we must stand aside here because we might miss the first part of this move if it is the top. But it's better to take that chance because if the weather market does come in, this market will explode to the upside. And you can see that's exactly what happened. And someone's asked the question, do you ever trade these when you're really bullish something and you have a strong conviction like what Mr. Z does in the room, that these are going to go a lot higher? Then that's possible. But folks, I'm not a strong conviction person. I try to stay away from things that could shock you, and especially on that day that we had down there when we had that big report. I stay away from those because I'm more focused on not losing very much. And if you do that, you're going to stay in the game. Maybe you're not going to be the richest person in the room, but by golly, you're going to make some money and you'll be happy. And it's been at least for me, it's been a fun ride. So that's basically what I'm talking about. Now, as we look at this market here in the corn, trading at 539 today, I believe what we're watching here is probably some type of a top, but how much higher it can go, is anybody's guess. And sometimes these things go a lot farther than you could ever think. What really surprises me is the fact that the soybean meal is cheap. I mean, it's just, it's actually, I think it's basically unchanged on the day with soybeans being up about 20 cents and oil being up 1.5 points. I mean, somebody's not using protein. That's what it looks like. So that's what we're paying attention to today in the grain markets. They'll certainly give you a chance. There's no question about that. But the $64 question is how much you'll have to wait to see if it's going to do that or not. So right now what I'm doing is I'm going to wait and see program. Let's just get this up here on the daily basis. You'll be able to see this just a little bit better. I wanted to show you what I mean here because you'll notice here where we had that line there at the 512 level. You'll notice that's what it was, and that was actually five days ago. We were looking to going short, and we decided to wait a day, and the next day it opened above 514. That you were watching a market that was going to go, substantially higher. So that's what I'm watching here in the corn market. It's going to give you plenty of chances, folks. The thing that you got to remember is we have no wiggle room in the grain markets this year. We have demand coming in from Russia, demand coming in from all over Europe, and especially China. And so this stuff is wanted. And if we have any crop problems in Brazil, which is usually about 33% of our crop, I believe that's what the figure is. You're going to be looking at some real serious things. And those are the things that cause wars. Famine is the one thing. You can take oil away from people, but you can't take food away from them, and that's where you've got to, really draw the line. So we must watch that as we look at these things unfold here as we go through today. Now, someone asked a question. Someone asked another question about the Tesla. Tesla's up today. We had a 61% retracement. We talked about that, backed off a little bit. The Apple, second question on Apple. As long as Apple doesn't get above 135.20, I think we're going to correct more. That's just my 2 cents worth. And like I say before, if you paid more than 2 cents, you've overpaid. So remind yourself of that when you're making these decisions. You are the one that has to make the decision on whether this stuff works or not. So what I will share with you right now is something really interesting here. I'm going to put up the just to see if it works, just for kicks and giggles. This is the artificial intelligence program here for the soybeans. This happens to be the July contract. And you'll notice here that we just made a higher high on the day there at 14.79, but we should start going lower for the rest of the day. Now, whether that's going to happen or not, I don't know. But the way I handle this is if we make a new high above 14.80, which is about 3 cents, I only have to risk 3 cents, $150, trading a contract that is worth over $70,000. And folks, that is what you call the use of leverage. And that's why looking at these on the shorter term time frame, on the 15 and 30-minute chart, you don't have to give up a lot. But sometimes when you catch it just right, And when you catch it just right, it makes for a really good move. So those are just a few things that I'm watching here this morning. We've got a break coming up here pretty soon. Remember, tomorrow we're going to have our friend Tim Bost. Remember, bring your vegetables, because we said if these markets weren't higher, we were going to have to talk to Tim, and they seem to be higher. We'll be right back. 877-927-6648.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based, vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Okay, we're back, folks. And hold on one second. I'm trying to do 2 things at once. And in my case, I've got to be very careful. The main thing to keep in mind, folks, from my perspective here, is if you take a look here at the main chart that we had in our letter this past week, which is none other, of course, than this New York Stock Exchange Index. This is the one that you want to pay close attention to because we've reached that level of 1.618. What we're seeing today, I believe, is nothing more than a fib retracement, much like the one we had at 41.46 the other day before we went down to 41.14. So that's my 2 cents worth. Whether, like I say, that's may or may not be what it is. But this is a major pattern that we're seeing here, folks. This is a weekly chart, boys and girls. I mean, you got to pay attention to that puppy. And, that's the way I see it. The bonds, I think we still got a chance here. on the bonds to come down to support. I wanted to show you that this is what I would like to see. We're trading around 158.05 right now. We hit 159.04 the other day, and I'm seeing good support here at 155.14. If we get there, that would be something that would be very, very important to take a look at. So that's what we're watching in the bonds. The gold, like I said, I'm still waiting. I'm a stepsister in the gold. We did okay, but we'll have to wait and see how we come back from missing this move. We didn't lose anything, which is good, but that's actually very, very good. The fact that you didn't lose anything. That's Warren Buffett's laws. Number 1 rule, don't lose money. Number 2 rule, don't break rule number 1. Or rule, you don't want to do that. Okay, those are the things. Tomorrow we will have Tim Boss as our guest, and I'm going to spend some time on some foreign currency cross rates tomorrow, like the pound, the euro, the Japanese yen, and the Canadian dollar, because they've been having some really nice patterns here. We've been waiting for this one in the euro. I'll be sending videos out on the euro tonight because we are within a few hours of getting into that position. So we'll see you all tomorrow. May God bless.